Welcome back. Part 2, how to prepare a vertical analysis of a balance sheet. Once the balance sheet has been created and the data is available, then we can analyze it. The analyze of the balance sheet allows us to see different ratios of each of the items on that balance sheet compared to the total assets. So that is what the vertical analysis is, the ratio of each item on the balance sheet to total assets. To find these ratios, you simply use our percentage method. Do you remember our percentage formula? Where rate is equal to the part divided by the base? Well, in this formula, we can simply see that each item of the balance sheet is a portion, a part, and the total assets is the base. The total is the base. Each individual item is the part of the base. When you take the ratio of those two, that is your R. So here we have our percentage formula showing up once again. So for instance, if your total assets were $50,000 and you had a liability of $5,000, we would simply figure out what that ratio would be by dividing that $5,000 liability by the $50,000 asset, and that would give us 10%. So that would tell us that our liabilities is 10% of our total assets. Now, this information can help a business analyze how balanced they are doing their business. There are different ratios that we will see later on in this chapter that we could use to determine how healthy the business is based on the balance sheet and its income statement. So we very quickly can look at how to prepare a vertical analysis of the balance sheet simply by creating your balance sheet and then creating another column whereby you can show the actual ratio of that asset or liability compared to the total assets. That's a simple way of looking at it. So here in your how-to section, 2 steps. First, you prepare your balance sheet, entire balance sheet. And then secondly, you create an additional column labeled percent. And then for each item, you divide that item by whatever your total assets is, and then multiply it by 100 so that we can get the percentage of that asset to total assets. So if it's a liability or whatever that item is. Okay, so that's how we do it. Look at example 2 here. In example 2, we are given a balance sheet from figure 21-2, previous balance sheet that we created. From that, we've taken all of the different items because we had a total asset value of $41,158. We simply take each of these items, divide it by that base amount, and multiply it times 100%. And we will then add to on the column percentage, whatever this percentage would be. You would go down and you would do that for each item on the entire balance sheet, assets, liabilities, and owner's equity. When you are finished, now your regular balance sheet will be organized the same way, but in this case now, there will be a separate column called percent. And you could look and you will be able to see how your balances are related to your overall total assets of the balance sheet. That is a vertical analysis. Now, another aspect of the balance sheet is companies oftentimes would like to compare their current condition to previous years. And if you were looking at your end of the year balance sheet, a lot of times a business would like to know, well, how are we compared to the same time last year? And what we can do is we can create a comparative balance sheet. And your comparative balance sheet does exactly that. It will list your assets, your liabilities, and your owner's equity, but it will show those numbers for the current year. That's the first group of columns. And then the second group of columns would be the previous year, or whatever year that you are comparing your current year with. Usually it's the previous year, but depends on what purposes you're trying to accomplish. You can use whatever year you have that data for to compare. Okay, how are we doing 5 years ago? You can do that, for example. So your comparative balance sheet, once again, will be identifying first off the name of the business, then the type of financial statement, in this case, comparative balance sheet, and then finally, it will include the dates that this balance sheet is covering. And in this case, what dates are being compared. Okay, you simply do what we've done to create your vertical analysis, but you do that for the previous year as well. You add those extra columns, and you see now, based on what we're seeing here, your asset sections, everything is the same, except now we have the previous year's data along with its percentages. So now we can look and say, oh, for example, if we're looking at our cash, we can say, this time of the year, we have $2,184. That was like 5.7% of our total assets in cash. This time last year, we only had about 4.8% in cash. So our cash holding is a little bit stronger than last year. I mean, that's important to know that if you have a goal to put a certain amount of cash on hand, then you want to know that how well you're doing in comparison to other years as well. So if that was a struggle and now the company is working to maintain or to reach up to a standard, sometimes it will take a gradual process to get there, but at least they can look at this and track it. And so all of these other assets and liabilities, the company can look at those things and compare how well are we doing now, or how are we doing now in comparison to this previous year, and then make some type of determination depending on the purpose that they are comparing those items. So the comparative balance sheet gives us this additional information of being able to see another year and compare that year with our most recent year. Okay, we have some stop and check exercises for you to do. Take a look at them. You gotta work them out. Try it out before you move forward. Check your answers in the back of the book before continuing. Once you have taken a look at your previous stop and check and you found out that you were okay and it works out good, we can move on to the last part of this first unit, how to prepare a horizontal analysis of a balance sheet. Previously, we looked at the vertical analysis, but the horizontal analysis is a balance sheet analysis that compares the same item for two different years. Okay, what does that mean? A vertical analysis compares each item to total assets. Okay? A horizontal analysis compares the same item for two different years, recording both the amount of increase or decrease and the increase or decrease as a percent of the earlier year's amount. So the earlier year becomes your base year that you compare your current year with, and then you take the differences. So for example, if our cash increased from $2,000 to $3,000, it was $2,000 last year, now it's $3,000, that represents an increase. So cash increase. So horizontally, we'll be comparing this year's cash with last year's cash and determining whether we had an increase in cash or a decrease. We would identify the increase, and then we would say, okay, it increased by $1,000. You take that $1,000 and divide it by the last year's balance, to get the ratio of increase, the amount of the percentage of increase. So that is basically what our horizontal analysis is doing with this comparative balance sheet. All right, so the how-to section simply tells us exactly that. First thing, you want to prepare your balance sheet for your 2 years. Record each amount in their separate columns. And then you want to create an additional column labeled the amount of increase or decrease. For each yearly item, you would go and do this. First, subtract the smaller amount from the larger amount and record the difference. If the earlier amount is larger, then that's a decrease. If the earlier amount is smaller, then you would itemize it as an increase, okay? Now, when the number is a negative number, the general accounting way is that you put that number in parentheses. Numbers on the balance sheet in parentheses represents a negative value, okay? Sometimes, obviously, you can put a minus sign in front of it, but one of the standards is take the value and put that value in parentheses to represent a negative value. The third step is that you create an additional column labeled percent increase or decrease, and of course, once again, your percent of increase or decrease would be the amount of increase or decrease divided by your earlier year's amount. It's important that you understand that because the current year derived from the previous year. So the current year shows how well you have increased or decreased, how much you've increased or decreased from the previous year. This is why in our formula here, the earlier year's amount is the basis. That is the denominator of the ratio. And then you take that quantity, multiply times 100% to get the actual percentage of increase or decrease. Okay, take a quick look now then at example 3 to make sure we see what's happening. Using the amounts that we had in figure 21-5, we are comparing, for example, cash, we're comparing the current year cash amount, subtracting from that the previous year's cash amount. Do we have a positive number? If it is, then that amount, $211, will be considered an increase. In the example of inventory, our inventory this year has a balance of $18,476. Last year, we subtract from that $17,317. Now, because we're seeing, oh, wait a minute. In this case here, we have a last year's amount is this. The current year's amount is this. Therefore, we have a decrease. So let's make sure we don't get this confused. Last year's amount is the value in the pink. Our current year amount and the value, this one here, $17,317. So this then represents a decrease. Our inventory decreased. Therefore, we represent that as a value in parentheses, and we'll call it a decrease. So you go down the line and you do all of that for each item. And then at the end, you'll end up with a comparative balance sheet. Now, in this case, this comparative balance sheet is a horizontal balance sheet because we're comparing each item on the balance sheet against its previous year's balance. And we're finding how much it increased or decreased, and then by what percent that increase or decrease is. So the basis now is different. Before, on our comparative balance sheet, when it was based on the total assets, then each group The total assets had to come to a total 100%. Well, that's not going to be the case here because you're comparing each item against the previous year, and they're not going to total up 100%. They're just going to show you how they performed against each other from one year to the next. So that is a different situation. So you won't end up with 100% total of each of these things. So in this case here, total assets, your total assets now is 7.6 decrease. 38,000 is the current year for total assets. Previous year, 41,000. We went down by 3,000. But what percentage of that did we decrease? 7.6%. Okay, so there you go. These are percentages, right? These are not values. These are your values. These are percentages. Now here's what's important. If you look at your accounts receivable, you can really become confused. If you look at the percentage only, you could say, well, okay, accounts receivable increased by 103%. Shouldn't that make this number here bigger? No. Look at the values. 4,000, 2,000. So it's only a total of $2,100 compared to an overall value of 38,000 and 41,000. So sometimes these percentages could be misleading. So you must know that these numbers are not related to your total assets. They are only related to themselves from one year to the next. And so 50 cents increase to $1.50 could be a tremendous 300% increase, but their value is just such a small number that won't really show up much at all in the total percentage of increase or decrease. So keep it in perspective. Do not confuse yourself with this particular type of comparative balance sheet. This is the horizontal one, line item compared with that line item, instead of the vertical, where the line item is compared with the total, okay? That's important you get that in mind. We have some stop and check for you. Take a look at them, work through them, make sure you're very comfortable with this, and then we can move on to our section exercises, finish up this first unit. In our section exercises, there are 10, 11, 12 items. For the section exercises, do only the odd numbers, unless, of course, the odd number is related to the previous even number, in which case then you would have to do that even number to be able to get the value for the odd number. Okay, so that is the first part of this chapter on balance sheet. We will talk next time on income statements. Stay tuned for next time. See you then.